US stock market is extremely bullish. Whether you look at the S&P 500 or Nasdaq 100 or Russell 2000, all these indices are extremely bullish and bulls are clearly dominating the US stock market. Every week we come up with the weekly US stock market analysis video. And if you're tracking this channel, then probably you must be watching the video. I would like to have a comment from your side whether you watched the weekly analysis video on the US stock market or not. In the last week, we talked about the possibility of market bouncing from a key support area because the market was trading quite in proximity of the support area, and it exactly did the same. So how many times we are usually right to arrive at the right support and resistance level in the US stock market? Could you ever assess the accuracy of this channel in ascertaining the support and resistance level? If yes, I would again wish to have your comment from your side. But before we start the technical analysis and prepare ourselves for the upcoming week, I would like to share a quote from Peter Lynch, which is very, very important because you can't be right all the time in the stock market. So what is important is to understand the truth of the stock market. And I would like to share what Peter Lynch says. In this business, if you are good, you are right 6 times out of 10. You are never going to be right 9 times out of 10. What does it mean? That if you are having a market edge 60% or 65% of the time, probably risk management, money management, and position sizing is the only answer which should become the part of your trading strategy to generate consistent profit in the stock market. Technical analysis doesn't give you the guarantee, but it certainly offers you the market edge which you need to be successful in the stock market. Do you agree? If you agree, then I would like you to offer your comment. What is the prevailing sentiments in the US stock market? If you look at the fear and greed index, it currently reads at 61 post weekly closing of the market in the last week. This reflects the fear and greed aspects of S&P 500 index. 1 week ago, it was reading at 51. So the market sentiments have certainly improved because in the last week or prior week, it was in the neutral territory. Now it has come in the greed territory. The market still is not extremely greedy. What does it mean? Still there is a cushion for upside move considering the overall sentiments of the US stock market. I am D K Sinha. Don't forget to like this video, subscribe the channel, hit the notification bell for updates. Let's straight away go to the price chart to begin our technical analysis. Let us begin our technical analysis with S&P 500 index. This is a weekly price chart. When the week ended in the last week, it closed at 5,969.34, and this is how it was bullish by 1.68% on week basis. The important thing is to understand is market is going to create a new record high. So let us first understand the historical price action. This was the rounding bottom pattern which gave a breakout here. We have already discussed earlier on this channel. So if I project the target on the basis of this rounding bottom chart pattern, let us project the target. So what we can see, the price has attained the first target of 61.8% expansion level, and then there was a minor correction because there was a loss of upside momentum in the market. So now the next possible target could be to 6,500 in S&P 500, which is 100% expansion with respect to the rounding bottom chart pattern. Since we know that rounding bottom chart pattern is a pretty reliable chart pattern, and it is probably moving towards that direction to attain the target of 6,500. Now let us understand the last week's price action. Last week, there is a formation of a bullish candle, and if you combine with the last candle, it is nothing but the bullish piercing candlestick pattern. Earlier, this area was a resistance, and the price exactly took support after it corrected in the prior week, which means the correction seems to be over and the trend is resuming. Further, what we can observe on this chart, whenever there is a correction in S&P 500, price respects EMA 21, which is represented by this green color line. Here too, it respected EMA 21 and then makes a new high. So this is one aspect of S&P 500 which is very important, that it comes to EMA 21, which is nothing but the mean reversion, and then bounces back to make a new high. Now let us go to the daily price chart. If you look at the daily price chart, there is an existence of a gap. And in the last week, we discussed about this gap from 5,783 to 5,864. And this gap provided a good support to S&P 500. So this becomes the important demand area where there is a confluence of EMA 55 as well. Because in daily price chart, whenever it corrects, it takes support at EMA 55. It has done it here. It has done it here. So price exactly corrected to this gap level, which was earlier a resistance area and now bouncing off. So has it completed the price action which looks rhythmic? So let us do the retracement analysis of the prior impulsive wave. So I am doing the retracement analysis. This is the prior well-defined impulsive wave. So the price has taken support exactly at 38.2% retracement level, which is a derivative of the golden ratio, and from where it is bouncing. Did we have the enough confluence and weight of evidence on the price chart? Yes, friends. It has earlier resistance, so this became the support. This was the confluence of a gap also, which we have discussed, and the confluence of EMA 21 besides the confluence of the 38.2% retracement level. So this bounce back is very, very significant. So what could be the potential target based on recent bounce back? So if we project the target based on the prior impulsive wave by using the Fibonacci expansion tool, the next potential target comes at 6,017, and then it might even go to 6,092 to 6,100. Targets of any chart pattern is the minimum expected objective. So the best strategy is considered to ride the trend and trail the stop loss. This trend line is very, very important because the price has taken support here, price has taken support here, price has taken support here. So it has 3 touch points, which means this trend line is representing the dynamic support on S&P 500, which might help the trader in S&P 500 to ride the trend and trail the stop loss. Now let us move to the Nasdaq 100 to undertake the technical analysis. Now let us move to the Nasdaq 100. This is the price chart of Nasdaq 100 in weekly time frame. This index closed at 20,776.23, and this is how it was bullish by 1.87% on week basis. Now here too, we had a breakout earlier of this rounding bottom chart pattern. There was a breakout, and now the market structure is higher highs and higher lows kind of market structure. So if we project the target based on this rounding bottom pattern, let us calculate the target and project it. So the first target comes at 21,775, and then it has all potential to move to 100% expansion, which arrives at 25,783. So yes, market is all set to create a new record high based on the chart pattern. Whether it will happen or not, it is only time will tell. We can only examine the price chart, do the prediction on the basis of the chart formation. Now here what we can see, this was the potential resistance. Price struggled here, and there was a breakout of this particular resistance area in the week that started on 4th of November 2024. And then there was a correction, and if you see the last week's candle, which is an inside bar. When inside bar gets formed, when there is a lack of downside momentum in the market. So let us go to the daily price chart to understand the further price action. What we can see here, we can clearly see this was the potential resistance area. Market corrected and took support on this earlier resistance, turned its role to become the support. Now here too we can observe whenever correction is taking place, EMA 55 acts as a very good dynamic support. So EMA 55 is an important reference point for Nasdaq 100. Now what has happened in the last week? Here there was an existence of a gap. We discussed about the gap at 20,249. This gap partially filled, and then market took support at this earlier resistance area and now bouncing off important support. Can we identify some more confluence in this price chart? So let us do the retracement analysis of prior well-defined impulsive wave. So let us go and check the retracement. So here I am checking the retracement. Can you see here? Here the impulse started from here. It has corrected and took support at 61.8% retracement level, which is nothing but the golden ratio, which means the price action is quite rhythmic. So in any case, 20,249, the existence of a gap with the confluence of EMA 55 becomes the good support area. Where is the potential next resistance? Here, after this impulsive wave, market got exhausted and there was a breakdown at 20,994. So immediate resistance would be 20,994 in upside move of Nasdaq 100. But once this resistance is taken out, then we can obviously calculate the target on the basis of prior impulsive wave by using the Fibonacci expansion tool, and then next potential target would be to 127.2% expansion level, which arrives at around 21,550 or 60 level. So overall trend in S&P 500, Nasdaq 100, short-term trend, intermediate trend, long-term trend are all bullish. Long-term moving averages are sloping up. SMA 144, SMA 200 and SMA 233. So what is the conclusion of this weekly analysis of the US stock market? S&P 500, Nasdaq 100 are in a clear, well-defined uptrending move. There is no sign of distribution at the top of the market. Based on the calculation of the targets, next price target, on the basis of the chart pattern, the market is likely to create a new record high. What do you think? Offer your comments in the comment section of this video. Thank you very much for watching. Looking forward to meet you very, very soon.